In approximately 2 weeks, a document is going to be filed with the United States Securities and Exchange Commission that will change the financial world forever. It is not a merger agreement. It is not a regulatory ruling. It is a prospectus, a public filing that will, for the first time in history, open the books of the most valuable private company ever built and invite every ordinary person on the planet to buy a piece of it. The company is SpaceX. The targeted valuation is $2 trillion. And when that document lands, nothing about the global investment landscape will look the same again. On April 1st, 2026, SpaceX made a quiet but seismic move. The company filed confidentially with the Securities and Exchange Commission, setting the formal legal machinery of a public offering in motion. The filing was not the document investors have been waiting for. That is the S1, the full public prospectus that will lay out SpaceX's financials, business model, risk factors, and ownership structure for the entire world to scrutinize. But the confidential filing was the starting gun. Under SEC rules, a company must make its registration statement public at least 15 days before its investor roadshow begins. SpaceX is targeting the week of June 8th, 2026 to kick off that roadshow. That means the S1, the most important IPO document in the history of financial markets, is expected to land in the week of May 18 to 22, right now, in the next 2 weeks. And the financial world is holding its breath. The numbers that have already leaked out of SpaceX through sources cited by Reuters, Bloomberg, and The Information are staggering enough on their own. In 2025, SpaceX generated somewhere between $15 and $16 billion in revenue. It produced approximately $8 billion in EBITDA, earnings before interest, taxes, depreciation, and amortization, which is a measure of operating profitability that signals a company is generating real cash from its core business. Bloomberg analysts project that combined revenue from SpaceX's launch business and its Starlink satellite internet service will approach $20 billion in 2026. None of this is official yet. The S1, when it drops, will be the first time the public has seen SpaceX's audited financial statements with legal precision. Everything we know right now is preliminary. But what we know is enough to explain why the demand for this IPO is expected to run 10 to 20 times oversubscribed. There are more people trying to get into this deal than there are shares available to sell to them by a factor of 10 to 20 to 1. To understand why, you need to understand what SpaceX actually is in 2026, because the company that is about to go public is almost unrecognizable compared to the startup that Elon Musk founded in 2002, with $100 million of his own money from the sale of PayPal. That original SpaceX was a rocket company with a single mission: to reduce the cost of getting things to orbit so dramatically that space would become economically accessible. Everything it has built since then flows from that original insight. If you can reuse a rocket the way you reuse an airplane, the cost of access to space does not just fall, it collapses. And when the cost of space collapses, entire industries that could not previously exist become viable. Satellite internet, satellite phone service, cheap, reliable access to orbit, and SpaceX holds more than 80% of the global launch market share. No other company in the world is even close. The Falcon 9 rocket, the workhorse of the modern launch industry, has completed more than 300 successful orbital missions, making it one of the most reliable rockets ever built. Its first stage booster has been reflown up to 25 times on a single vehicle, proving that the reusability model Musk always insisted was possible is not just a concept, but a production reality. The Dragon capsule carries cargo and crew to the International Space Station under NASA contract, a steady stream of government revenue that helps sustain SpaceX through its early years. The Falcon Heavy, the most powerful operational rocket in the world with its 3 first-stage cores, handles the largest commercial and government payloads that Falcon 9 cannot lift. Together, these vehicles represent a launch business that generated approximately $5 billion in revenue in 2025, and that currently has no credible global competitor operating at anything approaching the same cost, reliability, or launch frequency. But the launch business is not what makes SpaceX worth $2 trillion. Starlink is. Elon Musk's satellite internet constellation, currently operating more than 10,000 active satellites in low Earth orbit, having recently crossed the milestone of 7,000 of them being the newer, larger V2 variant, generated approximately $10 to $11.5 billion in revenue in 2025, with EBITDA profit margins of 63%. 63% margins on $10 billion of revenue is exceptional by any standard in any industry. For reference, Apple, considered one of the most profitable companies in the history of capitalism, operates at roughly 30% net profit margins. Starlink is producing operating profitability at double that rate on a subscription service that is still in the early stages of its global rollout. The service has crossed 10 million subscribers worldwide, Analysts believe that number could reach 100 million within a decade as coverage expands, pricing falls, and the hundreds of millions of people around the world who currently lack reliable broadband access gain their first real connection to the internet through Starlink's constellation. The total addressable market for global broadband connectivity is measured in trillions of dollars over the coming decade. Airlines are signing contracts to offer Starlink in-flight internet. Cruise lines are deploying it across their fleets. Militaries in multiple countries are using it for communications and battlefield connectivity. Remote industrial operations in mining, energy, and agriculture are replacing unreliable terrestrial connections with Starlink. And in markets like rural America, rural Brazil, rural Africa, and rural India, where terrestrial infrastructure will never reach the last mile in a cost-effective way, Starlink is not competing with fiber optic cable. It is the only option that exists. In February 2026, SpaceX completed the acquisition of xAI, Elon Musk's artificial intelligence company and Twitter, into the SpaceX corporate structure, since xAI had already absorbed X in March 2025 in a deal valued at $33 billion. SpaceX then announced in late April 2026 that it had agreed to acquire Cursor, one of the most widely used AI-powered coding tools in the software industry, for $60 billion. The company that files its S-1 in the next 2 weeks is therefore not the world's third largest social media network by active users, and now one of the most valuable AI software tools in the developer ecosystem. Elon Musk has spent 20 years building separate companies and is now consolidating them into a single entity that combines physical infrastructure, digital infrastructure, and artificial intelligence in a way that no corporation in history has assembled before. The IPO itself will be historic by every metric available to measure it. Saudi Aramco's 2019 public offering was the largest in history, raising $29 billion. SpaceX is targeting a raise of up to $75 billion, more than 2.5 times the previous record. 5 of Wall Street's biggest investment banks are leading the offering: Morgan Stanley, Goldman Sachs, JP Morgan, Bank of America, and Citigroup, with 16 additional banks handling distribution. The underwriting team alone tells you the scale of what is being attempted. You do not assemble 21 banks for a routine IPO. You assemble 21 banks because the logistics of placing $75 billion worth of newly issued shares into the market in an orderly way requires every major distribution channel in global finance working simultaneously. One of the most striking and genuinely unusual features of this IPO is its retail allocation. Standard practice on Wall Street for a major IPO is to reserve roughly 10% of shares for retail investors, ordinary people buying through brokerage accounts, and distribute the remaining 90% to institutional investors, pension funds, sovereign wealth funds, hedge funds, and major asset managers. SpaceX is reportedly earmarking 30% of its offering for retail investors, 3 times the standard allocation. That decision is not accidental, and it is not purely altruistic. It reflects a deliberate strategy to build a shareholder base that is emotionally connected to SpaceX's mission, to create millions of individual stakeholders who will follow the company's progress, not just as investors, but as believers in what the company is trying to build. Elon Musk has always understood that SpaceX's power is cultural as well as financial. The valuation itself is a debate that has been running on trading desks and in financial analysis reports since the confidential filing became public knowledge in early April. SpaceX is asking investors to accept a price-to-sales ratio of, for context, Meta was trading at roughly a quarter of that multiple when it went public in 2012, and Meta was profitable at the time of its IPO. NVIDIA, at the peak of its artificial intelligence-driven valuation surge in late 2023, which is still posting a net loss estimated at approximately $5 billion annually, even as its EBITDA turns strongly positive, is asking for 3 times the multiple NVIDIA commanded at its peak. Morningstar analysts described a $1.5 trillion, $1.7 trillion. The IPO pricing sits above both of those assessments, and investors who are willing to pay $2 trillion are betting that the 5 to 7 year growth trajectory justifies the price, even if near-term earnings do not. The trajectory of SpaceX's private valuation in the months leading up to this filing makes that bet look reasonable to some and alarming to others. In December 2025, an internal tender offer valued the company at $800 billion, itself a staggering number. The acquisition of xAI in February 2026 pushed the combined figure to $1.25 trillion. The IPO now targets $2 trillion, a 60% increase in valuation in under 6 months, partly the Starlink subscriber growth, partly the anticipation of Starship's eventual commercial operations, and partly the market dynamics of an offering that is expected to be so massively oversubscribed that demand itself is pushing the price higher before a single public share has changed hands. The Starship factor deserves particular attention because it is arguably the most important variable in any long-term model of SpaceX's value. Starship, the fully reusable megarocket that SpaceX has been developing through a painful and expensive test campaign, is not just SpaceX's next rocket. It is the vehicle that NASA has chosen for the first crewed lunar landing since 1972. It is the vehicle that will carry Starlink's next-generation satellites to orbit faster and cheaper than any previous launch system. It is the vehicle that commercial customers, including other satellite operators, space tourism companies, and eventually private lunar missions, are already booking launches on. The current Starship design can theoretically carry up to 100 tons of cargo to low Earth orbit in a single flight. Reusable, at a target cost per kilogram that would be lower than anything the launch industry has ever achieved. When Starship reaches commercial operations at any meaningful flight rate, the economics of access to space will change. Again, more dramatically than even Falcon 9 changed them. And SpaceX holds all of that upside exclusively. But the risks are real, and they are significant enough that any honest treatment of this story requires addressing them directly. SpaceX is still losing money on a net basis despite its enormous EBITDA. The Starship program has been expensive, frequently delayed, and has destroyed multiple vehicles and a significant amount of infrastructure in its test campaign. Regulatory relationships between SpaceX and the Federal Aviation Administration have been strained, with multiple mishap investigations slowing the Starship flight cadence. China is accelerating its own commercial space. Industry, with domestic rocket companies planning reusable vehicles that could eventually compete with Falcon 9 on price. The consolidation of SpaceX with xAI and X raises serious questions about governance, conflict of interest, and what it means when the world's richest person runs a conglomerate that controls satellite internet, social media, artificial intelligence, and the primary means of access to orbit simultaneously. Several financial advisors serving high-net-worth clients have described the IPO price as priced to perfection, meaning there is no margin for error, no allowance for the kind of operational setbacks that SpaceX has routinely experienced throughout its history. The lockup period that will apply to insiders, early employees, venture funds, and early investors who hold shares at a fraction of the IPO price expires between December 15th and December 27th, 2026. When insiders are free to sell, they often do, and the selling pressure that accompanies a major lockup expiry has historically punished day-one buyers of even genuinely exceptional companies. Figma crashed more than 50% below its IPO price within months of its debut. Snowflake followed nearly the same arc. Palantir dropped more than 60% in 2022 before recovering. These are not obscure companies. They are widely respected software businesses with real revenues and real customers. If the same pattern plays out after SpaceX's lockup expires, investors who buy on opening day could be sitting on significant losses within 6 months of their purchase. None of this changes what SpaceX is and what it has achieved. Revenue grew from just over $2 billion in 2021 to $15 billion in 2025, a more than five-fold increase in 4 years. It controls more than 80% of global launch market share. It operates the world's largest satellite constellation. It has flown astronauts to orbit and returned them safely. It has caught a 23-story rocket booster out of the sky with a pair of mechanical arms. It is preparing to land human beings on the moon, and it is building the infrastructure for a multiplanetary civilization in parallel with running one of the most profitable satellite internet businesses in the world. The S-1 that will be filed in approximately 2 weeks will reveal, for the first time, the precise financial picture behind all of that. The exact revenue breakdown between Starlink and the launch business, the exact cost structure of operating Starship's development program, the exact terms of the xAI and Cursor acquisitions, and how they are being consolidated onto SpaceX's balance sheet. The risk factors that SpaceX's lawyers believe matter enough to disclose to potential shareholders under penalty of law, and the ownership structure that will tell investors exactly how much control Elon Musk retains and what mechanisms, if any, exist to check the decisions of a founder who is simultaneously running multiple trillion-dollar companies, a government cost-cutting operation, and a social media platform all at the same time. The broader market context surrounding this IPO is also worth understanding, because SpaceX is not going public in isolation. OpenAI is contemplating its own public offering before the end of 2026, at a valuation reported around $1 trillion. Anthropic is similarly evaluating a public path. The total capital that could be absorbed by these three AI and space infrastructure companies alone, if they all proceed with their planned offerings, represents a reallocation of global investment at a scale that has not been seen since the dot-com era, and potentially exceeding even that period in its absolute dollar terms. Some analysts have suggested that SpaceX's decision to time its roadshow for June 2026 is a deliberate attempt to absorb available institutional capital before OpenAI and Anthropic enter the market, creating a capital siphon effect that secures the maximum possible valuation before competing offerings reduce the pool of available investment dollars. If that strategy works, it will add another chapter to the story of how Elon Musk has consistently outmaneuvered competitors in market timing in ways that seem improbable until they succeed. That document, when it lands, will be one of the most read financial filings in the history of the Securities and Exchange Commission. Because this is not just an IPO, it is the moment when the private space economy goes public. It is the moment when the company that changed the economics of access to orbit for the first time since the dawn of the space age invites the world to own a share of everything that comes next. Whatever the price turns out to be, whatever the first day trading looks like, whatever the analysts argue about in the weeks that follow, that moment will be remembered. The day SpaceX went public is going to be a date in financial history, and it is coming in 2 weeks.